Alrighty, Tesla's reporting earnings Wednesday after the bell. So, what's my prediction? How am I feeling about Tesla earnings here? Okay, well, first off, I just bought some of the shares. I bought 35 shares at $214. Obviously, I've been a shareholder of this company for many, many years. I got shares dating back in the public count all the way back to May of 2019, right? So buying these shares recently, am I confident in a short-term bottom for Tesla? The answer to that is absolutely not. No, I'm not confident that Tesla's going to bottom here in the short term. I think we're closer to a bottom for Tesla, but am I super confident Tesla's going to bottom here? No, I'm not necessarily. But with that being said, this might be the quarter of bottoms here in the short term. Now, I am a little scared. Okay, we got positives and negatives here. I'm scared that they're not going to hit their EPS number. I'll be honest. Now, EPS is expected to be down 38% year over year. I'm concerned that it might be too high when I look at these EPS estimates of 74 cents. When I think about all the price cutting Tesla's done, and obviously they can offset a certain amount of that with cost savings in the business model. But I don't know, man. I'm not super confident in that EPS number. If they come in and beat it, like, I'm going to be super happy about that. But I'll be honest with you guys, I'm not confident they're gonna beat that EPS number there. But on the flip side, I was looking at analyst projections for the June quarter and September quarter, and I think analysts are way too low in their estimates. I think they're way too low. I think there's a potential Tesla could actually bring up some pricing starting around those quarters. And I also think Cybertruck production is going to be flying at that particular time. So I think, if I look at the June quarter, analysts only have them growing 15% revenues. Then they have them bumped up to 29% in the September quarter. But I think those numbers are too low, guys. I really, really do. So this puts you in a weird dilemma where it's like, are you focused on the quarter they're about to report, or are you focused on the next few quarters, or are you focused on the long term? When I bought these shares the other day, I'm buying for the long term, right? Like Tesla's a long-term hold. I've owned the stock for years. It's a very, they continue to put up their numbers. They've been in a very tough demand environment for the past year and a half. I think that comes to an end. I think they will do well in the future. But let's be very clear about this stock. There's one thing, and one thing only, that will actually drive the stock the next day. And it has nothing to do with the EPS numbers they project. That will shake the stock after hours. Well, what EPS did they project? Or not project, post? What revenue did they post? But what's actually going to move the stock the following day will be one thing, and it's going to happen on the conference call with Elon Musk and the team. And that one thing is this: margin commentary. Margin commentary will be everything. If Elon Musk and the team have, let's just call it, positive things to say about margins as 2024 goes along, and they make some sort of comment about margins are bottoming in the next quarter or two, I'll tell you what's going to happen with the stock price. The stock price will fly. It'll probably hit 250 quickly and then go above that. That's all that, if they say that. If they say margins are troughing in the next 1 to 2 quarters, and from there we're going to start to see them move up, game changer. Stock's moving and grooving. Because then everybody says the bottom's in with margins. We're about to hit bottoms and margins. We're going up from here. It's off to the races. Because that's what's been killing Tesla stock, just to be honest, is the margins just eroding and eroding for quarter after quarter after quarter for a long time now. That's key. Now, if management team comes in and says, we're not confident margins are bottoming anytime soon in 2024, we're prepared to take prices even lower and to take our margins even lower or something like that, we're going under 200. If that's the commentary, because then everyone's going to say, oh my gosh, the price cuts still aren't done. They're going lower. Margins are going to go lower. Everybody's going to throw their hands up and be like, oh my gosh. And Wall Street's going to flip out over that. And you'll see the stock under 200 the day after earnings. That's what it all comes down to, folks. The revenue, the EPS, all that. Delivery numbers. I'm just telling you that's not moving the stock the next day. It's all about margins. And what do they have to say about margins, okay? So that's kind of my belief. Now, my belief is that margins will trough in the next 1 to 2 quarters. I'm pretty confident in that. I think we're going to hit trough margins in the next 1 to 2 quarters, and then we're going to start moving back up margins again. With obviously the price drops, I don't think Tesla's going up on prices right now. So I think they're going to probably keep prices pretty steady around the world for right now. Then you got Cybertruck, obviously, going into production. That's going to hurt margins in the short term. So I'm looking at the back half of the year. I'm looking at a Tesla that will likely start going up back on prices here and there on Model 3, Model Y, and for some upgrades and things like that. And then I'm also thinking about a perspective of consumer sentiment getting better maybe in the back half of the year. And then obviously Cybertruck being at big production in the back half of the year. That will help margins immensely. So I think margins trough first half of the year, and they start to pick up in the second half of the year, and then we roll with margins into 2025, and then we're having some fun at that point in time. So that's just my belief. We'll see kind of what happens there, okay? Palantir has done a really good job in gaining momentum going into AI. So an analyst is getting, let's just call it pretty bullish around Palantir stocks. So we'll speak about that. Obviously, Palantir stocks having a really good day. All right, guys, let's get into this.
To break it all down, didn't start out this way in January, but boy, did it come back. So does that make the setup for earnings tougher, Brent?
Yeah, I think the setup's tougher given the magnitude of the tech run we've had. We've highlighted there's always black ice in Q1 when stocks go higher. Last year, you didn't have this in tech. You didn't have the euphoria that you're seeing today. So there's a little bit of concern there. But I think we're still ahead of accelerating fundamentals, continued focus on margins, and then the AI wave, which is really not even hitting yet. The hype is there. The revenue reality of AI is not happening until the back half of this year into early next year, at least in software. It's obviously happening in semis with NVIDIA, but we think the setup still looks good relative to fundamental strength. We hosted 20 plus software companies the first week of January, and every one of these companies said demand is stable. No one is saying it's back to the excitement that we saw during COVID, but I think we're back to a better spot in demand. From all of our channel checks, and you're hearing it across internet and software in all the checks that we do.
So I'm curious why it's not showing up in revenues yet for these tech companies, because I was mentioning everyone was talking AI in Davos. Everybody has their use cases, and it's happening now, whether it's a medical device company or a furniture retailer. They're all talking about how they're using AI, and they're working with their enterprise software providers to do it. So why isn't it being monetized yet?
Well, I can answer that question. All these companies are going to see the numbers start to hit in 24. Like when you start to grow a new business, like the numbers are so meaningless at first until you start to reach to scale. And so the numbers will start adding up in 2024 for many of these companies, the actual AI plays, and then obviously in 2025 and beyond. But that's the way every business starts out. It's very meaningless. I mean, heck, with the iPhone in its first year, hardly sold any units. Didn't mean it was a flop product or it wasn't going to show up in revenue. No, it just takes a while. I mean, Tesla in its first years of trying to scale vehicles usually sells very few. And then, as it reaches the second year, third year, all of a sudden, boom, whoa, now the money starts flying in, right? So, I mean, that's just, I think it's common sense business. I don't know why so many people have had trouble wrapping their heads around that. That's every business ever.
I think part of it is early adopters is number one. Two, the analogy of, you put a pool in your backyard, no one really cannonballs in right away. And I think you're seeing people dip their toe in. It's analogous to having young kids. They're slow into the water, right? And the same thing is happening with CIOs. They're very slow into the AI water because you're risking your potential corporate data. You're risking bad outcomes. You're risking your data. And so I think what you're seeing is companies are putting big governors on AI. The biggest constraint in our work is really around security and safety of the data. And so I think everyone is in experimental phase. No one is in a mass market rollout. And that will move from
93% move. But once again, remember, many of those stocks in the Magnificent Seven have just started to hit new all-time highs. So that's just a little factor. It's not like they've blown, all of those stocks have blown through their all-time highs and they're like 30% higher, 40% higher. Many of them, actually, technically, even a stock like Amazon hasn't even busted through a new all-time high yet. Let that sink in for a moment. Same thing with Google.
Dip your toe into the cannonball phase, into 24, into 25. And we're seeing it in all the data. You can even see it in Microsoft, right? Amy Hood guided to little AI revenue in the front half of the year, more AI revenue in the back half. Their back half is starting now in their fiscal year. So even CFOs and CEOs are guiding to this. But I think to most people, the AI movement is all hype right now. And you would expect the revenue based on all the conversations everyone's having around it. The reality is it's tiny. For most tech companies, it's low single-digit percentage of their revenue.
Hey, Brent, since we have you on, I think you cover, I'm pretty sure I see on your coverage list, you cover Palantir.
Here we go.
And if I'm
Palantir,
not incorrect,
baby.
you have a sell on it.
What?
Stock's up almost 9% this morning. Any idea what's going on?
Wait a minute. I thought this guy was going to be bullish on Palantir. No. He's got a sell rating on Palantir. Based upon this headline, I was like, oh, this guy's got to be bullish. What?
Or I'm curious as to your thoughts given that move.
Yeah, today, I think, David, you're seeing a broad rally in tech, and so everything is green. I don't know specifically to what's happening at Palantir. We like other names better. We think that Palantir has done a really nice job in terms of getting their momentum going in AI, but we like other stories better.
What do you like best heading into?
Wait. Hold your horses for just a flippin' flapjacking moment. Wait a minute. When you have a sell rating on a stock, that has to be more than just, well, we like other names better. That's baloney. That's a bunch of baloney. If you put a sell rating on a stock, that means you're bearish on that stock. That means you think that stock's going to do bad. You need to get out of it. So that's just like ridiculous that he just kind of backed out of that one, like, oh, I like other stocks better. No, like if you want to have a hold rating on a stock and you want to go and say that, okay, that's fine, right? Or if you want to have a buy instead of a strong buy on a stock, okay, fair play. That one's pretty good. They got momentum going, but some other stocks I like better. Fair. But when you have a sell, it's a whole different situation, right? A whole different situation. So that was a little ridiculous to back out the way he just did there.
Given the tougher.
Either he didn't want to face that, or maybe they're going to go more neutral or bullish on stock. Maybe. And so he didn't want to say too much. I don't know. We'll see, but that didn't make any dang sense.
But also the second half ramp in AI revenue.
Microsoft's our top large cap name in software. Amazon's our top internet name. And then we like Salesforce.com for margin improvement. Their margins are at 30. We've said this. They're on a diet. They can derive incremental margin upside.
Fair play. Yeah. Tech rally draws 1999 comparisons.
It's a new all-time high Friday, and it's causing some to compare it to the tech-led stock market party of 1999. Our Deirdre Bose is digging into that for today's Tech Check. Morning, Dee.
Good morning. We've heard that before. We're probably going to hear it again. But so far, at least, this moment of AI mania and tech's rally, it has nothing on the dot-com bubble. But it doesn't mean that Wall Street isn't getting a little nervous. A note from strategist Ed Yardeni, it's making the rounds, warns that potential Fed easing risks fueling irrational exuberance. He even asks, is NVIDIA as today's Cisco, noting that it's, quote, starting to remind us of the parabolic ascent of Cisco stock during the tech bubble of the 1990s. So let's break that down. NVIDIA would have a lot further to run before any kind of crash, which he does acknowledge. Back in 1999, Cisco had a price-to-earnings ratio of nearly 150. NVIDIA's is currently 80, but its forward PE based on expected earnings in the next fiscal year, that's 50. Cisco's growth outlook back then...
No. That should be in the 20s when it comes to NVIDIA's forward PE on that stock right now.
It's just 30% versus...
If you look at what NVIDIA should bring in 2024 based upon analyst estimates, NVIDIA should be trading in the 20s right now. The highest would be in the 30s, but it should be the 20s actually for NVIDIA.
Is expected growth this year at 119%, nearly 60% next year. So yes, NVIDIA shares, and we made this point before, they have more than tripled last year, but that actually lagged the fundamental growth of the business. Earnings nearly quadrupled. Now, the question of irrational exuberance, however, may be more relevant in other areas of tech, like software sector, whose rally has been fueled arguably less by AI, more by the prospect of Fed rate cuts. And that is looking a little frothier. The software ETF, the IGV, that's up 25% over the last 3 months, and it's outperformed the broader NASDAQ this year. So while investors, they typically pay for growth and future profitability in these software names, growth estimates have come way down as well. Rate cuts, that could make those valuations look better, but it's unlikely to help the fundamentals, especially if AI spending accrues to new names, not yet public, or the mega caps. Lastly, guys, no sector has done better than semis this year. On that note, I leave you with Jensen Huang dancing in China. I know you showed it earlier, but I can't get enough of it. Counterpoint, though, let me just show you an AMD stock because I saw this as I was coming to air. Those shares are down 3.5%, kind of an outlier in the semi space today. And that's on a note that said that AI spending may not be that big. It's going to be big, but not that big. And it's a good reminder of what happens at these high expectations and if these companies, especially the semis, don't meet them.
Yeah, so what do I feel? Do I feel like we're in a 1999 moment right now for tech stocks? And the answer to that is no. Earnings are justified. Actually, a lot of these tech stocks are trading very undervalued right now. Meta's insanely undervalued. Look at what they're going to likely bring in 2024. Look at their growth rates. I mean, it's like they're very undervalued. Amazon, I think, is, if you look at Amazon's future growth, I mean, that company's still undervalued. Nvidia's, look at what they're supposed to bring in 2024 and look at the, forward P of that stock. Based upon growth, Nvidia looks undervalued right now. That's another reason I think it could run to 1,000 here this year. And so you go through these stocks. Apple's trading a little rich, okay, but it's not out of control rich. Microsoft might be trading a little rich, but it's not out of control rich either, right? Tesla's trading a little rich, but Tesla's been going through a tough time in their moment. Their profitability should start to tick up again in the back half of 2024 and moving forward. So I don't think we're in a 1999 moment. I think that argument could have been made very strongly in 2021. I think you could have made that very strong argument in 2021. But let's just be honest, these companies are at very different places than they were in 2021. Look at what they brought in 2021 for revenues and EPS. And look what these companies are supposed to bring in 2024 for revenue and EPS. Almost every single one of the big companies is like a night and day difference between their revenue and EPS expected in 2024 versus where it was in 2021, right? And many of these stocks are still not even back to where they were in 2021. And the ones that have surpassed have only a little surpassed. Even NVIDIA, the crazy gain, NVIDIA hit nearly 400 in 2021, if I recall, right? And that stock is, trading 500 something right now. So even that one, the craziest one, still isn't even close to a double up of where it was back in 21, despite their business being exponentially better in 2024 than it was in 2021, right?